The percentage of real estate investors has climbed drastically over the past 2 years, and it is largely due to the access to a lot of cheap credit. You can borrow a lot of cheap money, essentially free money if you take into account inflation, which is then used to make you more money from rental income and real estate appreciation. And because of this, more investors have been flocking to real estate, which pushed up demand and the pace of price increases, which then attracted more attention from investors who invested in the real estate market, and the cycle has been put on repeat for the past 2 years. Because of this quick pace of price increases caused by a spike of real estate investors, bank regulators have been looking into this issue in order to slow down investor demand starting last year before rate hikes started happening. Now, even though demand has slowed down since interest rates started coming up, it looks like the bank regulators haven't forgotten about the issue. In fact, OSFI, Canada's bank regulator, is finally taking action and has said it will make borrowing stricter for investors starting Q2 of 2023. Honestly, this is all still pretty new, so nobody knows exactly how this will play out. Right now, what we know is that the bank's risk allocation for investment properties will be 50% higher than what gets assigned to end user homes. So this probably means one of two things at least. Number one, banks will either have to charge higher interest rates on investment properties and or two, require a higher down payment for investment properties to offset this higher risk. Now, most commercial mortgages already require a higher down payment of 35%. If you think about it, real estate investing is like a business, so it is possible to see a similar higher down payment requirement. There's also other countries like New Zealand that have already bumped up their down payment requirements for investment properties last year, so they make good case studies for OSFI to use as a reference too. Now, even though neither increasing interest rates nor requiring a higher down payment are good for investors, it's the latter, increasing down payment requirements, that will be a lot more detrimental if it actually happens. So in this video, let's take a look to see what it means for Toronto real estate if we end up seeing higher down payment requirements moving forward. Before I continue, don't forget to give this video a thumbs up and subscribe to our channel so that you can see more videos like this made specifically for real estate investors in Toronto. The first and most obvious impact is that there will be a lot more demand for lower priced property types because that's what most people can afford moving forward. Right now, a $1.6 million triplex would need $380,000 of capital at a 20% down payment. But later on, if the down payment gets bumped up to 35%, that triplex would need $620,000 of capital. And so all of the investors who could afford a triplex now can probably only afford a $1 million investment property moving forward. What this means is that condos and starter freeholds like semis and bungalows will end up getting a lot more buying action, which means faster price growth in these markets. I think ultimately what we'll probably see is a bigger difference in investment property characteristics. Lower priced properties will see faster growth, but they will also see lower rent yields because of higher price premiums. The second change we might see for those who can afford bigger properties with more capital is a shift towards bigger value add projects. Let's take a step back and look at our current situation where we only need a 20% down payment. Right now, there's actually less of a drive to choose value add projects because the renovation money typically needs to come out of pocket. So an investor would need access to a lot more capital to begin with. So even though you can get higher value add returns, many investors end up choosing turnkey properties because they take up less time and are cheaper to get into. If we end up getting a higher down payment requirement, what you'll notice is that the difference in initial capital ends up becoming more similar between the two scenarios, and this is going to give value add opportunities a lot more attention. And it's not just because you can make more money more quickly with value add work. It's also because this allows you to build up equity in your home more quickly. Once you refinance the property after you upgrade it, you can get some of the cash back out, so you end up having less money tied up in that property. In the long run, this means you will get better returns with less capital. In other words, there will be much better ROI with value add opportunities. The problem here is that the barrier of entry is still up there for value add projects. If regulators require a higher down payment, more people will ultimately be forced to buy condos. So we might end up seeing fewer investors creating affordable housing in freeholds, which is the opposite of what the government's housing mandate is. In other words, if regulators end up going with the higher down payment route, then I'd expect to see more government incentives like tax credits or rebates specifically meant for mom and pop investors who are up for creating new affordable housing in order to help achieve the government's housing supply goal. The last impact is more of a short-term thing, and we're already noticing this train of thought once we started pushing this news out onto social media. When more people start hearing about the tighter investment property requirements and we get more specifics confirmed, we're likely going to see a pushed up wave of short-term demand from real estate investors trying to get in before regulations change. So if you are looking to get into the real estate market in the near future, this is a heads up that now is a good time to start looking before more news gets confirmed. Right now, we're seeing a lot less buying activity and prices are a lot more volatile. What this means is that you can score some pretty awesome deals out there today as long as you're persistent and you put in enough offers on different opportunities. All it takes is one motivated seller and an awesome team to show you what makes a good deal, and we've definitely got you covered there. Now, when you're ready to start looking for investment properties and you want to talk more about investing in Toronto, we're ready for you. We can take a look at your requirements and preferences and then match you up with the best investment property that fits your needs. After we help you buy it, our team also provides renovations guidance, leasing, and property management if you need it. So just connect with us to learn more about our services by heading to the link in the description below. Don't forget to give this video a thumbs up and look for us on Facebook, Instagram, and LinkedIn if you want to hear from us more regularly. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye.